Morning, everyone. Good morning. Let's see if we can turn this music down. We are 8:30 Mountain Time. Let's get started here. How's the angle on that camera? We are live on Facebook, LinkedIn, YouTube, X. Instagram is not working this morning. No Instagram this morning. I don't know why. Sometimes the connectivity sucks, which is exactly what's going on here. You know, I listened to the Scott Adams podcast. You ever listen to Coffee with Scott Adams, his podcast? Every morning. It's been going on like 9 years, I think, that this guy has been doing his podcast 7 days a week, 365. Christmas Day, doesn't matter. On his honeymoon in Hawaii or wherever the hell he was, doesn't matter. Traveling during COVID to some remote Asian place, doesn't matter. He's on every morning doing the show. I don't think he's ever missed one. I don't think he's been sick. Well, he's been sick, but he's been on the show anyways. And that's not really, sounds great from LinkedIn. Thank you, Ashley. That's not really why I do this show. I'm not trying to replicate that, but it's part of my morning routine is what I listen to. And what I've noticed is, like, I've been through 2 weddings with this guy. I feel like I've been through 2 of his wives. I don't know, but he's on there 7 days a week, 365 days a year. I'm trying to do a live stream 5 days a week. And what's my success rate on showing up and actually having the technology work? Is it like 3 out of 5 days every week? I'm barely a passing grade. Anyways, I don't know why Instagram's not working. I almost didn't make it this morning. I had such a story, and I was in a hotel shower here in Calgary, and the water wasn't working. I might have shampoo in my hair. It's a disaster, but let's get on with it anyways. Target down 20% in early trading, and that's on a terrible miss on same-day sales and earnings that were released, I believe, after hours yesterday. Whatever, they were down 20% this morning. Remember yesterday we talked about Walmart and how their cohorts are changing, and bottom line is the wealthy people, say $150,000 of income, are leaving the more expensive stores and going to the discount stores like Walmart, which is also succeeding with its grocery. People are going in there and buying groceries. And so Walmart's doing great. Target is getting hammered. Also getting hammered, Ford laying off 14% of its employees in Europe, 4,000 employees, mostly related to EV, to electric vehicles. Autos getting hammered. Electric vehicle mandates are getting hammered. That's going to be one of the themes today for this show, is how governments just F everything up, unintended consequences. But automotive's getting hammered, including my automotive, by the way. We'll talk about that more in this show on future episodes. We had some good commentary on various platforms yesterday, comments to one of the topics that we covered, which was a tweet, X post from Naval that networking is overrated. Go do something great, and it will come to you naturally. What else did he say here? I would say to startups, don't spend your time in meetings unless you really have to. I truly think networking is overrated. I read all these articles on how you have to network, and they make me want to vomit. Go do something great, and your network will emerge naturally. So there was a debate. There was a debate in the comments sections on the various platforms about, should I be networking? Should I not be networking? Do I spend my time on this? Do I spend my time on that? Somebody on YouTube with the handle GAS, G-A-S, said talking on YouTube is networking, which is basically saying that I'm networking by doing this show. And yeah, maybe, but it's not really networking, is it? My goal here, I hope, is to build a community of people interested in small businesses. Wait a minute. Did I even say the welcome? This is November 2024, episode 303. Welcome to the Mornings with Scott, the best damn business show for medium and small businesses on the planet. Oh my goodness, I'm so frazzled this morning. I missed the opening that many of you love so much. Anyways, we're trying to build a community of business owners, business enthusiasts people that are trying to understand how to make money, startups, entrepreneurs, business owner managers. And so we're building a community. I hope I'm building a community of you, and I'm trying to add value to that community. Also, for sure, the show is great marketing. It is great marketing. I can't tell you how many times I go to an event and people go, "Oh, you're the guy that does that live stream," or I have a new meeting with somebody and they refer to content on this podcast or its predecessor content podcast. So for me, it shortens that sales cycle, right? Like you need to build credibility when you're a smaller shop, a boutique shop, a specialized shop like we are at Sinclair Range. And so the show is great marketing for that. And so my thoughts are, this is not really networking so much. I disagree with that comment from Gas, but rather, it's trying to do a great thing to add value to a community. And you should focus not necessarily on networking, but on doing something great, on doing something valuable. But that doesn't mean hide. Get the word out. Let the people know that you're doing something great. That's certainly part of it. So the theme for today's show is how governments F everything up, unintended consequences. There's the next post from Brian Roemmele. I hope I'm pronouncing Brian's name properly. Roemmele. Go check him out for sure on X. He is, if you don't know him, he's an expert in voice technology, artificial intelligence, often referred to as the Oracle of Voice, according to his Wikipedia page. He has a career as a scientist, a researcher, an analyst, and an entrepreneur, and significant contributions to the development and understanding of voice-driven AI systems. He had a post yesterday that I thought was really interesting. How did Rome fail? And it says it started with lead, and it ended with all the things that lead leads to. That's a difficult sentence to read because a lot of the words are spelt the same, even though they're different words. The insidious creep of lead poisoning into the Roman bloodstream, a consequence of the shift from terracotta to lead piping for water transport, played a significant yet often overlooked role in the decline and eventual fall of the Roman Empire. The transition, seemingly investment in infrastructure, governments F everything up, delivered not only water, but also potent neurotoxins directly to the heart of Roman society, subtly eroding its intellectual and demographic strength over generations. So basically, the population was weakening, it was getting stupider, and people weren't reproducing, all because of this lead poisoning for infrastructure upgrades. Lead's devastating impact on cognitive function is well documented. It disrupts neurotransmission, impairs reasoning, problem solving, intellectual capacity. Imagine a society gradually losing its sharpest minds, its ability to innovate, to strategize, to govern effectively. This slow poisoning of intellect spanning generations contributed to the empire's growing instability and vulnerability. This was all based on a research paper, by the way, that he provided a link to. Beyond the mental decline, lead's insidious effect also targeted the Rome's population's reproduction health. Lead exposure is linked to reduced fertility, miscarriages, and stillbirths. The demographic impact, compounding over time, would have significantly weakened the empire's manpower. The parallels to modern society are chilling. While lead pipes are largely a relic, so we've moved on from that government mistake or expert mistake, we continue to grapple with the pervasive presence of environmental toxins, microplastics, pesticides, industrial chemicals, all contaminate our food and water supplies, raising concerns about potential long-term health, including cognitive impairment and reproductive issues. Does this sound anything similar and familiar to what we are experiencing in modern day society? It sure does to me. And this was an election or a campaign issue raised by Robert Kennedy Jr. I think he's dead on. I'm excited that he's been confirmed. Brian goes on to say, we are witnessing a subtle decline in the cognitive function and reproduction health. The consequences of the way may not fully manifest for decades or even centuries. Listen, I'm going to resist the temptation to say that Democrats eat a lot of plastic, microplastics. Kind of feels that way. The science is clear on the dangers of lead. Let's move on from the lead. It would have been a life-ending moment to announce to the world that lead was slowly killing Rome. So those of you kept quiet. So his point here on the post, I skipped a lot of the words for you so we can move on. But his point on the post is that the experts knew that this was bad for you. They knew it. They knew it, yet they kept quiet. That's what happens, and it results in the fall of Rome. Experts always know better until they don't. That's how he concludes this post. Go check him out, Brian Roemmele on X. I ask again, what is the new lead? Are we mature enough to examine it in the light of day? Progress, my friends, is not always positive. The actions of the government are not always positive. In fact, they really are. They have unintended consequences. I sure hope that Robert Kennedy Jr. gets confirmed and we can attack the modern day health and wellness issue. Speaking of governments effing everything up, Globe and Mail reports for my U.S. community, which is more than half of this show. Manitoba is a problem. You know where Manitoba is. I don't need to tell you that. But the Globe and Mail is like the Wall Street Journal of Canada, says that Manitoba government pledges to freeze electricity and gas rates. That's an unfortunate use of a term, by the way, freeze, when you're talking about price caps on electricity for a year in its throne speech. So a throne speech is like a State of the Union for a provincial parliament. And the NDP/socialist government there yesterday had a bunch of policies that were announced in its throne speech, and one of them is a price cap on electricity. So I pointed out on X that this is a tricky tax hike. It's a tax hike by a socialist NDP government, and it is redistribution of wealth. Why is that? Well, the electricity is manufactured and distributed by Manitoba Hydro, which is a crown corporation. In other words, it's the government itself that delivers the electricity. So it is putting a price cap on itself. It had a deficit last year, even though it passed on price increases to the consumers, to the households and businesses in Manitoba, and now it's not going to do that. So who's going to pay for it? Obviously, it's going to be covered by taxes, which means it's going to be covered by paid by the taxpayers, middle income taxpayers, where the bulk of tax revenues come from. And so the whole thing is a redistribution scheme. And what is it going to do? Like price caps always do, it's going to create a big bump in electricity prices later on and increase tax rates. Governments F everything up, and price caps don't work. I had a story yesterday that we didn't get to because we ran out of time, but the Wall Street Journal was reporting that big oil doesn't mind big regulation. So the Biden administration, when they came in, immediately put big regulation on the oil and gas industry, not only on drilling, fracking, but also on transportation, right? Do you remember the pipelines and the cancellation of those projects? And so although there's been lots of drilling and lots of production, the reality is there's been regulation that's been holding that back. And so this article in the Wall Street Journal says Donald Trump has promised to remove the Biden era regulatory barriers to drilling oil and gas, and has become even easier with Republicans' House majority. So Republicans have won the House and the Congress and the Senate, and they have the executive branch as well with Trump, obviously. And so over the weekend, Trump nominated Chris Wright, an outspoken fossil fuel champion, as energy secretary, further cementing the new administration's pro-drilling stance. Drill, baby, drill, drill, baby, drill. Take methane emission regulation, which the Trump administration might roll back. So this is, again, a reversal, according to the Wall Street Journal, of the Biden era regulations. So the industry lobby groups are against, such as American Petroleum Institute, American Exploration and Production Council. They oppose the methane fee that was imposed by Biden. as part of the Inflation Reduction Act, which we all know had nothing to do with reducing inflation, but rather was a climate change, global warming, Green New Deal in disguise. And so the fee starts at 900 metric a ton. Who cares? Let's move on. But interestingly, ExxonMobil has expressed support for the methane fee, and Total Energy's chief executive has warned that rolling back methane regulations would ruin the industry's reputation. Wait, what? So the industry association groups that are largely representing the bulk of their membership would be medium and smaller businesses in this fossil fuel sector. They're against this methane regulation and fees, whereas the big guys, Exxon and Total, they are in support of it, maybe because they don't want to ruin their reputation. It says here in the Wall Street Journal that the leading oil men have suddenly become Greenpeace activists. Strict regulations tend to work in their interests. Larger companies can afford to comply with them, and smaller ones often can't. This is the issue. So you go to regulate an industry, and what happens? You wipe out the medium and small businesses, the entrepreneurial, the creative businesses in that industry, and it's only what's left is a handful of larger players. Why? Because they're the only ones that can afford the compliance and the fees associated with your regulations. So you're not wiping out the industry, you're wiping out the competition, and you're putting all of the power into a handful of much larger organizations, which is the point here. Let's skip along here. Another binary order that will almost certainly get reversed is the pause on liquefied natural gas export permits. A permanent ban would have been bad news for all prospective U.S. LNG exporters, but the pause probably makes it easier for the incumbents to negotiate contracts with potential buyers. So this just continues on that the more regulation you have, the easier it is for the larger companies to be successful, and the smaller companies disappear. In the 4 years through the end of 2024, the four largest companies in the S&P Oil and Gas Exploration and Production Industry Index are expected to have generated more than $330 billion in free cash flow. Under Trump, it was just $91 billion. So in the Wall Street Journal, there was a chart showing just this. Under Obama, the free cash flow of these top four were up here. Under Trump, it was down here to 91 billion because it was more diversified of an industry. Remember, Trump was drilling more, maybe not more than we do right now, but was drilling more than certainly under Obama. And so the sector, and we were industry, energy independent in the U.S. And so under Trump, the industry was healthy, but the earnings of the top four were down, and then they jumped from 91 billion to 330 billion. Why? Because Biden regulation wiped out all of the competition. So historically, through traditional energy, though traditional energy has performed slightly better under Democrats, notes Arjun Murthy, partner at energy advisory firm Veriton. This because they tend to favor putting roadblocks on new supply. Just like the Manitoba government will be doing, they're putting roadblocks on new supply, which helps limit capital spending, boost oil prices, he says, and those roadblocks tend to be more damaging to smaller producer than giants. That's another point. When you put in the regulation, you're also what the governments have been doing is they go after the financial industry and said, hey, you can't finance those fossil fuel projects. Who does that hurt? Does that hurt Exxon, who has all the money in the world, or does it hurt the mid-sized, smaller producers who are being creative and trying to do interesting new things and providing some level of competition? Obviously, it wipes out the smaller guys. Regulation eliminates competition and drives inflation by creating scarcity. It drives inflation by creating scarcity because governments F everything up, unintended consequences. I had a what do I want to call it? Like a white paper, something like that, sent to me maybe a month or two ago by a buddy of mine in Canada who's been around forever, even longer than me in the junior resource development, let's call it penny stock. And he was complaining exactly about this in the securities industry, which is true. I was going to talk about it more in this show, but I just didn't think it was appropriate. And I didn't want to get involved in it. But the bottom line is, 15, 20 years ago, you had a number of independent, non-bank owned let's call them broker dealers to use a US term. So smaller investment banks that sell securities, raise money for junior resource projects so that we can mine for gold and uranium and all these things that we need in a modern economy. And then there was some frauds like Bre-X back in the day. How long ago was that? 20 years ago. And we got overregulated, in my view, on the securities side. And by being overregulated, what did it do? What do regulations do? They wipe out the mid-market and the smaller competitors. And so all of these smaller investment banks are gone. I think he said in this paper, if I recall, they were down to sort of 3 or 4 legit broker dealers that work in this space. And if you're a retail investor, if you're me and you want to go open an account somewhere at a bank, let's say a bank, investment bank, bank-owned investment bank, open up a retail account, buy some stocks, I'm not allowed to invest because there'll be compliance roadblocks. Nobody wants to touch these junior resource stocks, and it's killing the industry. Interesting paper. Regulation is really important. I'm a pro-regulation fan, but it needs to be smart and it needs to be balanced, because over-regulation, which is what always happens in a liberal and democratic government, is it creates scarcity and drives inflation. So Morningstar investment research firm says that an investment research firm published yesterday that Trump's win sparks big gains in Bitcoin ETFs and an influx of cash. What's next? Bitcoin is ripping to record highs, riding the euphoria surrounding Donald Trump's reelection. This rally has delivered an immediate substantial boost to Canadian Bitcoin ETFs, driving both performance and inflows of investor flocks to these funds. So an ETF, by the way, is an exchange-traded fund. And so it's just basically you can invest in this. This is how I buy my Bitcoin, by the way, although I largely missed that upside. But you could buy a fund that in turn is investing in Bitcoin or other cryptocurrencies. And the advantage of that is you don't need a wallet. You don't have the secrecy, but you don't need a wallet or other ways to store your Bitcoin. You're just buying a fund, and the fund goes up and down depending on the underlying price of Bitcoin, which was exploding above $94,000 today, and is definitely heading to $100,000. So, however, market analysis and portfolio managers, according to Morningstar, tracking the trend, caution against reading too much into the Trump trade. They warn that the president-elect's favorable view of Bitcoin and supportive campaign promises don't guarantee delivery. Nevertheless, they agree that the broader adoption of Bitcoin, both at the individual and institutional level, should translate to sustained growth for Bitcoin tracking assets like ETFs. His campaign promises, Trump's campaign promises regarding Bitcoin, included support for its mining and removing some regulatory barriers. No, it didn't. He had a limited number of support for Bitcoin. The Bitcoin community was just so overwhelmed that Trump was paying any attention to them at all, because no politician does, other than in a negative sort of way. But he promised to get rid of the head of the SEC. What was his name? You can tell me in the comments if you remember. I can't think of it right now. He promised to get rid of that guy, Lighthouse? I don't know. Anyways, to get rid of that guy who clearly anti-Bitcoin. So that was great. He promised to set up a committee of smart sort of crypto and tech people to help formulate regulations that work for the Bitcoin community. And he promised that the U.S. government would never sell any of its Bitcoin. It gets its Bitcoin. You say, wait, the U.S. government has been buying Bitcoin? No, the U.S. government has not been buying Bitcoin. What they've been doing is seizing Bitcoin from criminals, as they often do with assets. And so they end up with this accumulation. And he said he wouldn't sell any. Why is that important? Because Bitcoin is largely, at this point, still a Ponzi scheme. It has no underlying utility whatsoever. And if you have no underlying utility, why do people buy and sell it? They buy it because they want to get into this Ponzi scheme. It's just a Dutch tulip at this point. You can't use it to pay your taxes. You can't use it for anything. And you sell it to take your profits, or you sell it because you're scared. You buy it because it's you have FOMO, or fear of missing out on the Bitcoin trade. And so if the government is not going to sell its Bitcoin and the price is 100% tied to supply and demand, they're not creating more supply by selling, and so the prices won't be crushed. That's important. Why is the regulation important? Setting up a committee? Because the holy grail for Bitcoin, apart from having some sort of utility, the holy grail is that institutions dive into Bitcoin. And Mr. Wonderful, Kevin O'Leary of Shark Tank fame, has been telling us forever that what the Bitcoin community really needs, and what the institutional community really needs with respect to Bitcoin, is some sound regulation. So you avoid the FTX frauds, you just avoid the frauds in general, and you set up some rules for the road, because no institution wants to put serious money into an asset class like Bitcoin and then have the regulator come back at them 5 years later for should have known better, or we're trying to retroactively clean up some shit. And so it becomes a real problem for institutions. But if there's real regulation, sound regulation, the institutions can jump in, and then what? And then you have more demand and the price can explode. So that's what's going on with Bitcoin. So what does Morningstar say further? Why is Bitcoin rallying? Several factors are driving the increase in Bitcoin's value. There's a pro-Bitcoin president-elect. We talked about that. Although there are other contributing factors. Lower interest rates create more incentive to invest in riskier assets, including cryptocurrency. Additional lower oil prices could support. This is all nonsense. Look at there was a good discussion on the All In podcast last Friday when they did their release on Bitcoin prices and where they're going to go. If you're really interested in this subject, you should check that out. It's smart. But I think they said one thing that really resonates with me, which has been my hypothesis all along, is you think that the rise in Bitcoin is a hedge, is counter to the rise in the stock market, to rise in inflation, that it would be more like gold. It's a flight to safety, but it's not that at all. Bitcoin has always been 100% correlated to S&P growth, to the growth in all stocks, right? So when things are bullish, generally across markets, people buy Bitcoin. When things are bearish, generally across markets, people sell their Bitcoins. It is not a hedge. It is not counterintuitive. It's not a flight to safety like gold, but it should be. It should be ultimately. And when institutions with regulations start buying into this asset class in a much bigger way, prices are going to go up substantially, and at some point it'll flip. It'll flip to be a hedge against the U.S. government dollar, against the U.S. dollar. And this, by the way, is one of the reasons I don't believe this is ever going to happen with Trump, because the more that the U.S. government supports Bitcoin, the more it is walking away from the U.S. dollar as the globe's currency, and the entire U.S. economy is based on the U.S. dollar being strong and used as the global currency. That's a fact. That's why we're so stressed about the BRIC and using the yuan, the BRIC countries using the yuan currency, or using a ruble, or using some other made-up currency, because all of that takes away from demand for the U.S. dollar, which is a big problem for the U.S. government and their economy. So just keep that in mind. I'm not sure where this is going to head. This article goes on, and we are out of time. But the point of this, why is Bitcoin exploding? It's exploding because they believe there is going to be a supportive presidency. And supportive means what? It means the U.S. government is not going to sell. That's really important. But also there will be regulation, hopefully, that supports institutions buying into Bitcoin. And we'll see if that's going to happen. I'm sort of 50-50. That was the promise. He usually carries through on his promises. And I think institutions are chomping at the bit. So they really want this. They want to get in. They want to buy this thing. And they want it to be They want it to be a commodity, not a security. And we're out of time, and there's too much technical insight. But on that All In pod, if you podcast, the All In guys, which you can find on YouTube, that's where I listen to it. They discuss what makes it a commodity trade versus a securities trade, and it has to do with the design of the blockchain, which I thought was cool and sort of interesting. But the bottom line is institutions are chomping at the bit to get into this deal, to get into blockchain, into Bitcoin, and for that they need proper regulation. Trump has promised proper regulation. I think it's against his own interests in the U.S. economy, but we will find out. All right, I survived this. It was sorry we missed you on Instagram Live, but you'll get the recorded afterwards. And I'm glad that I got here. It was quite a drill this morning to get this all sorted out and work through the technological issues. I am off to Chicago. Right now, I'm there for the Turnaround Management Association dinner tomorrow night, which I'm very excited about. So we'll see you all, my Chicago friends, and I should be at a hotel tomorrow morning and available to do this show. We'll talk to you then. Thank you.